why we are here gathered. So, here I go. Now, ladies and gentlemen, good morning and welcome to the launch event of our ESG report in the Nigerian economic, financial and banking sector. It's an honor to address such a distinguished gathering of stakeholders from around the banking and insurance institutions. The Nigerian financial sector plays a key pivotal role in the nation's economic development and stability. Between 20, I think I should leave this here. Between 2019 and 2022, the sector has faced a series of macroeconomic challenges and opportunities driven by both domestic and global factors. The CBN has introduced various policy measures to stabilize the economy, including adjustments to interest rates, cash reserve requirements, foreign exchange management, and in recent times, the bank's recapitalization mandate. Despite these efforts, high inflation rates impact economic purchasing power, and both banks and insurance companies face significant challenges related to asset quality, credit risk management, and foreign exchange volatility. In the insurance sector, these macroeconomic challenges have been equally impactful. High inflation has led to increased claims costs and operational expenses, while foreign exchange volatility has affected the valuation of assets and liabilities. Additionally, the sector has had to navigate a rapidly evolving regulatory environment aimed at enhancing industry resilience and protecting policy holders. In the midst of these uncertainties, there is a growing recognition of the importance of environmental, social, and governance practices within the financial sector. Banks and insurance companies are increasingly integrating ESG considerations into their operations, risk management, and reporting. This proactive approach helps them stay adaptive to changing regulations and meet the rising expectations of consumers, intergovernmental agencies, and other stakeholders. Our team at Ipmc'S Limited has conducted extensive research to analyze the ESG footprint and performance of financial institutions. Our study provides a comprehensive overview of the environment and industry trends, highlighting significant gaps in the availability and quality of ESG data in the Nigerian financial sector. Our goal is to empower financial institutions with actionable insights and data to support their journey towards sustainable growth and responsible business practices. The data and guidance provided in this report will foster a culture of sustainability and innovation within the Nigerian financial sector. We believe that a strong focus on ESG performance will not only benefit individual organizations and also contribute positively to the broader economic and society. I would like to extend my heartfelt thanks to all of you who have joined us today, both virtually and physically. Your commitment to sustainability is vital as we work together to build a more resilient and adaptive financial sector and economy. I look forward to productive deliberations as we take the program forward. Thank you very much.
Thank you very much, sir, for that very detailed opening remark. The next we have on the agenda this morning is the presentation of the ESG ratings report. And without wasting our time, we're going to delve into that, and we'll be bringing up Agatha Ipmc'S, the ESG consultant of Ipmc'S Limited, to come forward and led us into the detailed finding of this report, of which we all are gathered to hear, to talk about the methodology and the data sources, of course, to give key insights and implications of this for the banking and insurance sectors. So what this section is all about is that she's going to come up to tell us in essence what this report is about, how it was carried out, what it means for the banking and insurance sector, and how it will be helpful and beneficial to our organizations and the bank.
Thank you very much. Good morning, everyone. I know an apology has been tendered earlier, but I would like to tender another apology for the late start. And thank you very much for the patience. Before my colleague starts, I would like to give an introduction on this project, what birthed it, and how we got here. Sometime last year, we were looking for data on ESG for a project we were working on. And we searched the internet, we searched everywhere, and we couldn't find anything. My boss and I had a conversation with Mr. Robert Obiachi on how to cover this ESG data gap. And that was the birth of the process that has become this project and this report. What we have done, myself and my team, comprising of myself, the ESG consultant, a researcher, Mr. Adebayo Ajao, statistician, Michael Farubeli, Mr. Samuel Amaru, who is the data analyst, Yusuf Suleiman, who is the assistant statistician, and many more people on the team. We have data extractors who are on the team as well. What we've done is to look in-depthly into the performance of banks and insurance companies in Nigeria, both publicly listed companies and public interest companies. And we have extracted data from the source. Some companies participated in this process, and we've also extracted data from secondary sources. That's your annual report and your sustainability report. We've gathered this data together, analyzed it, and come up with what we call the ESG ratings report. The first of its kind in Nigeria. Thank you. A round of applause for that, please. The first of its kind in Nigeria. So, we start the presentation. Thank you. Yes, sir. Okay, awesome. Of course, we're all learning people here, leaders of industries and companies. But we'll start with what is ESG, since we're all gathered together for ESG today. ESG stands for environmental, social, and governance, representing three main arms of sustainability. I don't think that's written there. So we're gathered together for ESG. ESG represents environmental, social, governance. When we're talking about Awesome, thank you. So we're talking about environmental issues like water use, waste disposal, carbon emissions, gas emissions. We're talking about CO2, NO2 here. So there's this common misconception that companies in the financial industry do not contribute to environmental hazards, but that's a lie. Because we have travel time, which is the most common amongst financial industries. We have people traveling from here to there. That's part of our analysis. I'll show you later on. But we've discovered that one of the major emissions from environment from banks and financial institutions like insurance is the travel time. We'll get into that later. Social factors, we're talking about employees, employee performance. Awesome. So why ESG? ESG has gained significant traction globally, reshaping investment strategies, corporate policies, and regulations. Okay, so before ESG became a buzzword sometime 2 years ago, there's been emphasis on it from global communities. We have the United Nations, the SDG goals, and the recent Nigerian Climate Change Act. So all of this is turning ESG compliance into an opportunity for competitive advantage. There's also a lot of noise and talk around green finance, which is the major reason why compliance is encouraged. So the rise of green finance in Nigeria, Ghana, South Africa, and other countries underscores the growing mainstream adoption of sustainability, linked financial instruments, and carbon markets. So, for example, Nigeria issued its first green bond in 2017, the first ever sovereign green bond, a collaboration of World Bank, UNEP, Climate Bond Initiative, and the Ministry of Finance. All of this is to say there's reason to comply with ESG regulations and ESG reporting. Okay, so our research. We undertook this research because banks and insurance companies are increasingly integrating ESG considerations into their operations, risk management, and reporting. So we have looked at 3 arms. We have looked at operations, we've looked at risk management, and we've looked at reporting. So one of the things we noticed when we're trying to gather data for this project is that we would call companies and ask for their sustainability managers, and they will most likely refer us to their risk department. So it's one of the recommendations for making that organizations have not learned to also make sustainability an arm under risk management. Yes, so we're seeking to communicate key findings, insights, and make recommendations to stakeholders. That will come on later on. Benchmark performance of financial institutions against global standards. We're talking about the United Nations Global Compact, the GRI, the TCFD, which has become obsolete now, the IFRS. Provide an avenue for organizations to respond to increased expectations from regulatory institutions. For us, we have NICOM, we have CBN, we have the Nigerian Sustainability Banking Principles, we have UNPRI, intergovernmental agencies. I've mentioned earlier, the United Nations Global Compact, the SDGs is not a Nigerian invention, that's the intergovernmental invention. Investors. So more investors are becoming forward-looking to say, okay, we want to invest sustainably. That also leads us into sustainable finance, which is the reason why we're insisting that companies comply. Raise awareness and catalyze action towards a more sustainable future. So I put it down there that our process has been benchmarked. Our process has been benchmarked against global ESG rating companies like S&P Global, MSCI Sustainability Ratings. Okay. So what we did for the start of this project, because this is the new edition, was look at the performance of banks and insurance companies from 2019 to 2022. Reason being that 2023 reports, especially sustainability reports and CSR reports from most companies are not out. We're also looking to see how we can make that happen this year. We've also done this to evaluate how these institutions are integrating ESG considerations into their operations, risk management, and reporting. One of the things we noticed in this research was that there is a significant gap in the availability and quality of ESG data. Some organizations that we went deeply into their reports just reported on the surface. There wasn't much emphasis on the different matrices that should be measured. The ultimate goal is to foster a culture of sustainability and innovation, benefiting individual organizations and the broader economy and society. So what's the point of ESG? We are saying do not focus only on financial performance of the organization, but look at other parts of your performance. We're talking about the environment, social, and governance, and how it affects your stakeholders in general. Okay, our sample size. This research has covered 29 commercial banks, merchant banks, all licensed by the CBN, as well as 34 insurance companies licensed by NICOM. We have kept this under these brackets because we understand that these are the regulators for these companies, and they have put certain criteria in place for reporting. So outside of this, we're not able to find quality data. We have a benchmark. We can't assess your company if you don't have at least an annual report, an annual financial report. So we stuck to companies licensed by the CBN and NICOM. Both of these institutions provide regulatory oversight, comprehensive coverage, data accuracy, and influence on industry practices. Right. So under the insurance companies, we looked at 23 general insurance, life insurance 14, but out of those 14, we're only able to get 7. General and life, out of 12, we're only able to get 8. Bear in mind that when I say we're only able to get 8, I mean that companies that have their reporting in place and structured enough for us to get ESG data. So out of 49 companies licensed by NICOM, we were only able to get information on 34. And when I say information on 34, I mean companies that we can work with the information provided. Some companies are provided summary reports on their website, which defeats the whole purpose of disclosure, if we're being honest. Okay, so for the banks, we have 8 internationally licensed banks, and we're able to get 8 sample size. National license, we have 12, but we're only able to get data for 8 as well. For regional licensed banks, we have 6, but we're only able to get data from 3. We have different banks, 4, data for 3. Merchant banks, 6, data for 3. Quoted primary mortgage banks, 3 and 3. So all in all, we're able to get data on 29 banks. Great. So I have taken the time to list the companies we were able to get data on. I'm sure I didn't have timing, but we have Abbey Mortgage Bank, Access Bank, Citibank, Correlation Market Bank, EcoBank, FBN Holdings, FCMB, Fidelity Bank, Globus Bank, GT Bank, ITMB, Giant, Keystone, Living Trust Mortgage Bank, Lotus, Nova, Providence, Rand, Stanbic IBTC, Standard Chartered, Sterling, SunTrust, Taj, Titan, Union, VBA. Insurance companies as well, African Alliance, AIICO, ICO, Alliance, Anchor, AXA, Capital Express, Consolidated, all the way to KBL Insurance. The insurance companies still continues any insurance company limited entity. Okay, so for environmental metrics, these are the metrics we use to assess the banks and insurance companies we rated. We use data on GHG emissions, energy and water use, data center efficiency. We're talking about your different data centers, especially for the banking banks, and climate strategy. We'll get into how much information we're able to get on each of these metrics later. Social metrics, we looked at diversity, discrimination and harassment, workforce breakdown, human rights, human capital development, hiring, employee well-being, community engagement. For governance, we looked at risk management, corruption and bribery, policies, information security. Yes, so we've got into the methodology. What we've done here is allocate weights based on the significance of each of these metrics to the industry. So for governance, we allocated 44%, obviously, because when we're talking about banking, the banking sector and insurance sector, governance holds the biggest weights. Social factor we're giving 43% and environmental factor we're giving 13% for obvious reasons. Of course, if we're going to be looking at an industry like oil and gas, we would obviously give environmental factor a higher percentage. We've done this based on the level of importance to the industry standards, and we benchmark against companies, global companies like Ipmc'S. The sub-factors which I've mentioned earlier, the IPMC ESG score measures the company's performance and management of ESG risks, opportunities, and impacts compared to industry peers. I'll find this. This is going forward. I'm going to be giving a brief overview of what we found. A detailed breakdown of the entire research will be found on our website, which will be available after this launch. So this is just a brief overview for lack of time. I'm just giving a brief overview of what we found. The banks in Nigeria are increasingly incorporating ESG considerations into their operations and risk management frameworks. ESG integration is largely driven by regulatory pressures, consumer expectations, and the need to align with global sustainability trends. So we found out that the banks that were complying because of CBN regulations, SEC regulations, NGS, Nigerian Stock Exchange. The insurance companies, I don't want to be ahead of myself, but okay, let me say this for free. The insurance company compliance was really low. But the regulatory pressure for insurance companies was from NICOM. They have their governance guidelines, sustainability reporting, consumer protection framework. We also found that the Climate Change Act, which was just recently put in place, has also become a regulatory pressure for companies. The Nigerian Stock Exchange, like I mentioned earlier, and we have global and regional initiatives like the United Nations Sustainable Development Goal, Africa Union Agenda of 2063, and the Global Reporting Institute. Okay, so our findings. Our research suggests varying level of engagement with sustainability reporting practices within the insurance and banking sector. While some companies have demonstrated a commitment to transparency and accountability by producing sustainability reports, a significant portion remains inactive in this regard. So we found that during our research that 48% of banks had sustainability reports and 52% did not have. That's a huge gap. It means that there are more people not complying than complying. Only 11%, 7 out of the participating companies prioritize climate risk assessments. We're talking about 7 out of 63 have prioritized climate risk assessment. This underscores a potential gap in recognizing and addressing climate-related risks. That's really low number, and I understand that it's because of the misconception that climate risk is not a major risk in this part of the world, but that's not true. Climate risk has different outshoots and how it affects us personally. For example, our waste disposal is a major thing in Nigeria, and it contributes to it affects us all. It affects us all. Our findings indicate that only 30 out of 63 companies have their environmental management systems audited. That means that you can report anything and we can't be sure of it, right? So it means that you're not auditing your EMS system. This suggests that many companies will not undergo independent assessment of their environmental management practices. That's a risk for us, especially that are working with this data. Our analysis indicates that only 21%, that 7 out of the 34 companies assessed, consider reporting on their sustainability performance necessary. So I've mentioned it quite a couple of times that the insurance companies do not prioritize sustainability reporting. I can count on this hand, out of the 34 companies, how many reported on their sustainability footprint for the insurance companies. 79% of insurance companies do not have sustainability reports. You can obviously see that pain because I keep mentioning it all over the reports. We searched and searched and searched and called, requesting for data from these companies, but there was nothing. This highlights a prevailing trend of non-disclosure regarding sustainability initiatives among insurance companies. And to be honest, that's not good enough because banks are not the only ones required to report on these things. Insurance companies are also major stakeholders in the financial industry. Within the banking sector, nearly half of all the banks assessed have taken the initiative to produce sustainability reports. I mentioned this earlier that we only have compliance from 48%. That means half of the banks are not reporting on their sustainability footprints. That's not good enough. Okay, so our general findings across both banking and insurance sectors, it is observed that all companies that have opted to produce sustainability reports have appointed sustainability managers. This underscores the integral role of sustainability managers in driving and overseeing sustainability initiatives. That means if you don't have a sustainability manager in your organization, you do not plan to report on it. It's a significant gap that must be closed. On gender diversity, 4 out of 63 companies achieved at least 50% female representation in their board leadership. I suggest that every company comes and requests for their reports because you will find how you've done in terms of gender representation on your board. There are some companies that do not have females represented on their boards. That's a significant gap. In 2024, that should not be so rigid. On human rights, 33 out of 63 companies collected data on at least 40% of human rights issues. I find that human rights is not a priority in the financial sector. I don't know why that is, but we've taken our time to report on it company by company, see how you're faring across all the metrics that we have measured for your human rights compliance. We're talking about due diligence on the human rights, freedom of association, right to collective bargaining, equal remuneration, discrimination. Something interesting happened when we were trying to collect data on this. We had asked some companies to give us data on all of this, freedom of association, right to collective bargaining. And I kept getting calls. Is that not confidential? Can we share that? I don't think it is. Human rights is a basic metric that should be collected, if there's nothing to hide, of course. Social and environmental reporting assurance. Relatively low numbers of companies conducted social and environmental reporting assurance. I remember that I had mentioned this earlier. You have to assure your reports because if you bring independent parties to assure your report, you can take more reliance on it. For companies that have their reports not assured, we have to do extra work to make sure that the information we're getting from their report are accurate and show the true picture of what's going on in the organization. This indicates a potential lack of external validation of ESG disclosures. I understand that there are many requirements to report on your ESG footprint, but let's also add the fact that assurance is integral to trusting your results. Emissions tracking was really lacking. Findings related to emissions tracking revealed that some organizations are yet to implement robust emissions tracking mechanisms. So we understand that there are Scope 1, Scope 2, and Scope 3 emissions. Scope 1 is the one you emit yourself. Scope 2 is the one you outsource. Scope 3 is the traveling I referred to that is literally out of your control. You just have to minimize the risk. Gender pay balance. Only one company explicitly reported on gender pay balance. I was beside myself when I was writing this, but I was conflicted. Should I put the company's name? Should I not? Because I feel like they deserve some credit for that. Only one company out of 63 reported on gender pay balance. This highlights a potential transparency gap in addressing gender equality issues. Employee turnover rates. I had serious problems finding data with my team, of course. Only 6 out of 60 companies are publicly reporting their employee turnover rates. There's currently limited insight into workforce dynamics and retention strategies. This is a major pain point for us that are collecting data. We need companies to start reporting explicitly on these metrics. In summary, higher engagement, but 8% of banks assess our sustainability reports, indicating a higher level of engagement to sustainability practices compared to the insurance sector. I understand that some insurance companies are represented here. I would like to implore you to prioritize collecting data on your sustainability footprint. Gender diversity, only 6 of rated banks achieve. I mentioned this earlier, climate risk assessment, EMS auditing, and I also mentioned what the insurance sector is doing in that regard. Okay, so one of the gaps we noticed was limited data disclosure, data verification issues. Some companies reporting, we couldn't rely on it because they were either not assured or incomplete reporting was noticed. There's generally a lack of historical data. Because this is the maiden edition, we decided to look at 4 years data. We noticed that from 2020 upward, there's literally, for some companies, nothing we can gather on their ESG footprint. So that's the gap. I don't imagine how that can be salvaged, but it's a gap we've noticed. So key highlights on sustainability trends in 2024, why you should care. So the GSSSB issuance for 2024 is projected to grow modestly. That's for banks and for the insurance sector, from 0.95 trillion to 1.05 trillion, with a share of 14% of the global bond market. So there's a market for green bonds and green finance. Compliance is the key to accessing that market. That's what we're trying to communicate here. There's a growing demand for sustainable loans, incorporating ESG key performance indicators into credit agreements. Lending banks, insurance, and other financial institutions are continuing to increase transparency around their sustainability strategies. There's also a carbon credit market, which is also growing in Nigeria, that needs to be looked into. Recommendation. So enhanced regulatory oversight. We have made sure to ensure that some regulators were represented in the hall today, and we're saying that regulators should strengthen ESG reporting requirements, compelling insurance. I highlighted insurance again, that's my bad, but I'm actually paying. Compelling companies to disclose a standardized set of ESG metrics. Encouraging best practices, recognizing insurance companies that excel, insurance and banks of course, that excel in ESG reporting to encourage others to adopt best practices, which is what we're doing here today. Ipmc'S has decided that we need to actually laud this thing that, okay, companies that are doing well, we need to encourage, and companies that are not, we also need to encourage you to do better. Insurance, this is a gap for insurers, should assess and manage climate risk in their portfolios and promote climate resilient practices among policy holders. Green products. Development of green insurance products that support environmentally friendly practices. Insurance should also engage with stakeholders to promote sustainability awareness and encourage behaviors. ESG reporting, that cannot be emphasized enough. There should be structure in place to make sure that your ESG footprint is accurately recorded and reported. Okay. I was also conflicted about putting this out here, but since we're going to be recognizing best practice, the top 5 performing banks based on our research, Zenith Bank has done exceptionally well. So well that when we are called the person in charge of sustainability at Zenith Bank to ask her certain questions, she was so sure that everything needed was in their sustainability report. Very detailed, everything covered to the extent to which they could. Access Bank has done exceptionally well as well. Stanbic IBTC Bank, Fidelity Bank. I would like to give kudos. I know she's watching online. The sustainability manager for Fidelity Bank was the first person to respond to our call for data. Turner of Fidelity Bank responded to our call for data immediately. Almost immediately, we have requested for it. She's ready to fill the questionnaire. For the top 5 performing insurance company, we have AXA Mansard. AXA Mansard has done exceptionally well in reporting their ESG footprint. It was seamless getting data from their reports, and it was verified as well. That's assured. Custodian and Allied has done well as well. Alliance, Coronation Life, and Custodian Life. I would like to also mention, this is a good place to mention that when you compare the results of the insurance companies, that their scores to the banks, the gap is near ridiculous. So the top performing insurance company was nowhere close to what any bank had reported. Our future outlook. So we're going to be starting the data collection for our 2023 reports for both banks and insurance companies immediately after this project is. In conclusion, we're playing a pivotal role in the sustainability landscape by delivering in-depth, comprehensive environmental ESG data tailored to the unique challenges of the African financial sector. I think it's a good place to mention that when we're doing our research around what methodology to follow, we have looked at S&P, we have looked at MSCI, Sustainalytics. Big kudos to our source as well. There is stuff around ratings for credit ratings, of course. We have noticed that, especially with the intergovernmental organizations and international organizations, that their methodology was not necessarily tailored to the unique challenges we face as a nation in Nigeria and Africa largely. So what we've done at Ipmc'S is to tailor this data needs and data points to our specific needs, especially around issues like environmental, social, and governance. Thank you very much.
Thank you so much, Monica, for this very precise and detailed reporting strategies and methodologies. One of the key things that stands out is that when you talk about this ratings project, it's about sustainability. And this involves us to take on very stringent responsibility to make sure that the banking sector is covered in the area of sustainability. Please come to the hand outputs for Agatha, for that one. Next on our agenda is the keynote address. And we'll be calling up someone very dear to us to be able to do that. We have her in our midst. She's the special advisor to the president on Economic Council, and climate change in the person of Rukaya Rifai. Ms. Rifai.
Everyone distinguished colleagues, because I can see some familiar faces. Elders too that I respect, and friends. It is truly an honor to stand before you today at this pivotal moment as we launch the Ipmc'S Limited Scheme ESG Rating Report. I'd like to extend my gratitude to the organizers for inviting me to speak on this significant event. Today, we gather to explore the theme, driving impact, harnessing ESG for sustainable finance. This theme underscores the urgent need to integrate ESG considerations into the core of our financial systems. As we navigate the complexities of the modern financial landscape, it has become increasingly clear that sustainability is just not a moral imperative, but a strategic necessity for long-term business survival. In recent years, the concept of ESG has gained unprecedented traction. And the ESG factors are no longer peripheral concerns. They are central to the resilience and long-term success of businesses. Companies that prioritize ESG are not only contributing to a more sustainable, inclusive, and equitable world, but are also positioning themselves for value creation that not only ensures greater financial performance, because there is a correlation between ESG adoption and high performance, but also embedding value levers that will sustain this performance. Corporates must ensure that they attain the fine balance of creating sustainable value for their enterprise value creation, as well as that of society, in what is understood as share value creation. This means that corporates must look beyond themselves to the outside world to seek to understand and incorporate what value means to their stakeholders. And in doing this, they can leverage frameworks, they can leverage standards, they can leverage ratings and guidelines to establish clear expectations and, very importantly, blind spots. Because this framework gives a broad list for you to take into what is called your materiality assessment to identify what affects you as a business. But I'd like to draw to the attention that the game-changing standard will be the IFRS sustainability standards. I'm so proud of Nigeria. Nigeria announced early adoption. And even though there has been a transition in our financial reporting policy, they have continued and they have done the adoption readiness assessment. They have a working group and they're actually piloting. There are certain companies that have opted for early adoption and are piloting it. And of course, rating is why we are here, and ratings can also help corporates to set ESG performance standards. Beyond this, it can help corporates benchmark their performance. And very importantly, and on a broader note, it would stimulate healthy competition in ESG performance. It also fosters accountability and transparency, as ratings are mostly done based on disclosed ESG information. It's not that companies are doing it and they are doing it on their own. If you don't disclose it, there's some ratings that they even deploy AI in picking up the data. And that's why ratings are very important in this stewardship and accountability and transparency in dissemination of the information. Through high ESG performance and transparent disclosure of investor grade ESG information. Because it has to be investor grade, and we noted when the speaker was presenting the data quality issues. For my previous slide, when the true test, after we do the data gathering, the true test of the data you collected is when you now call the data owners, come and sign off for your data. That's when you know how confident they themselves are on that information that you're about to help them display. So corporates will be able to create value for themselves and society at large. And now it's actually an enabler for investment attractiveness. So now let's practicalize this and let's begin with environmental considerations. Although I also like to reinforce economic, because we still have to have financial buoyancy to be able to create value on those other levels. But because when you look at it nationally, there's so much focus on GDP and all these economic, and with corporates too on a more micro level, there's so much focus on profit, share price, shareholder, and that's why it's ESG. But it's always still very important to keep the economy, because you're talking about prosperity, planet, people, and then principles of governance. If you look at the World Economic Forum stakeholder capitalism. So coming back to E, environment, of course, climate change, which is an existential threat, resource depletion, environmental degradation, waste, like our previous speaker mentioned, all pose significant risks to business and society alike. Companies that proactively address these issues through sustainable practices and operations, such as reducing footprints, investing in renewable energy now with the high energy cost, and promoting circular economies, are better positioned to thrive in a resource-constrained world. And what's also very important, which I was mentioning to Uncle Rugby here, I'll still call you my Uncle Rugby, is financed emission, because we're not here for financial services, the financial sector. What are you financing? What are your loans on? What's your loan book looking like? Even for insurance, what are you insuring? I'm on the Intergovernmental Committee on Carbon Markets, and we're looking at it from the value chain. And we're on a call with the Big Four and from UK. And we were talking about even insurance, there's value. Because we generate credit on an asset, you need to insure it to preserve that value. So what's your financing and where your finance is going is very important. Even maybe for society, more important for us to be able to actualize, our climate goals and also ensure that we're investing in sustainability-linked activities in our economy. Now turning to S, social considerations. This encompasses a broad spectrum of issues, including labor practices, community engagement, diversity and inclusion, human rights. Businesses that foster inclusive and equitable workplaces, support local communities and uphold human rights, not only enhance their reputation, but attract and retain top talent. In fact, even on a country level, we have this human capital development program that we inherited from the past administration. It's the National Economic Council program. And the team went to Ghana. ECOWAS is driving it as a regional strategy because West Africa in particular is doing so poorly, where we have the worst HCBI. There are two main indices by the UNDP, the UN and World Bank. And we are doing worse than even the sub-Saharan average as a West Africa bloc. And Sierra Leone is doing so well. There's so much political will, and it stems from a survey when they were going for elections and they saw that the younger generation, social, human capital development and social is very important to them. And they're using it and it's working. So human capital, all of a sudden, they're seeing a big leap in prioritization, China allocating resources and so on. So even at a corporate level, you'll be able to attract and retain top talent, foster innovation, and very importantly, earn the social license to operate and build trust with stakeholders. And then to the G, strong governance frameworks are the backbone of the responsible business conduct. This involves ensuring transparency, accountability, ethical behavior at all levels of the organization. Companies with robust governance structures are better equipped to navigate regulatory complexity and maintain reputation and also maintain investor confidence. Research has increasingly shown that integrating ESG factors into investment and business decision leads to value. Sustainable finance is not about sacrificing returns. It's about recognizing long-term profitability and also recognizing that this is intricately linked to sustainability of their businesses. Investors are increasingly demanding that companies demonstrate their commitment to ESG principles, and those that do so are rapidly reaping the rewards. In fact, if you see in some markets where their ratings are advanced, you'll be shocked how an investor would, from the ESG data, what they publish, they will look at, for example, your spend on this community as a percentage of your revenue and compare you with the competitors. They would also look at your spend on learning and development as a percentage of your revenue. There's so many analytics they do, picking out information from ESG reports. The launch of Ipmc'S Limited's ESG rating report is testament to the growing importance of these issues. And this report will serve as a critical tool for businesses and investors alike, providing valuable insights into how companies are performing on ESG. It will help identify leaders and laggards. I'm sure the smart companies know where they want to, which of the two categories they want to develop, drive improvements, and ultimately contribute to a more sustainable financial ecosystem. As we move forward, I urge you, business leaders, investors, policymakers, as stakeholders to embrace the principles of ESG wholeheartedly. I must say there's significant progress and open-mindedness, even within policy making, even within this government. Now you can see, did you see the tweets of the president on World Environment Day? He's starting to even our finance ministers, they're starting to really, try to lead on it, and hopefully we'll be able to catch up with President Ruto. So let us commit to making decisions that not only drive financial performance, but also contribute to the well-being of our planet and society. By doing so, we create a future where businesses thrive in harmony with environment and communities they serve, and very importantly, we leave the world a better place for future generations. In conclusion, the journey towards sustainable finance is both a challenge and an opportunity. It requires us to rethink traditional business models, innovate and collaborate across sectors. But the rewards, a resilient economy, a healthier planet, a more equitable society are well worth the effort. Thank you once again for the opportunity to speak today, and I look forward to insights and discussion that will emerge from this event. Together, let us drive impact and harness the power of ESG for a sustainable future. Happy World Environment Day. Thank you very much.
Thank you so much, Shukara. Please, can we do better? Can we put the and okay, talk for address there. Thank you so much, Shukara, for this. We appreciate your time here. And bringing on our panelists. And we have panelists who are physically here on site with us. And we have one who is joining us on. Start off, we want to welcome Mr. John Briggs. Mr. John, we recognize the presence, want to welcome you to join us for the panel discussion. Mr. John is the Deputy Director of SEC, that is Securities Exchange Commission. You're very much welcome, sir. Thank you. Second on our panel list, it's going to be sorry, just a second. So the second person to join us on the list is going to be Pastor Itua. Okay, so I'm going to join us in a second. Pastor Itua Igodalu, and he's the founding partner for SIO. He'll be joining us in this very important discussion that is centered around ESG ratings. Thirdly, on the list we have is Ms. Nana Skari Megedo. He is an investment professional with experience in investment appraisal and also on project implementation. I don't know if the virtual link, our virtual guys, I don't know if you can confirm if she's on, so it's no way we can. Is there any way to be able to
Hi, I'm on. I don't know if you can hear me.
At least while our panelists on site are getting ready, is there any way we can confirm that they are with us? All right, please just give us a second to fix that. So the technical thing is there a possibility of projecting to the main screen? Okay, just give me a second to confirm that because we have to be sure that our virtual panelist is joining us online and we can see her while after the pictures they are taken outside, the panelists can join us here as well. Just a second. Okay, you're welcome, Seth. We are trying to get all the panelists to join virtually. So once to get it to be projected here. Okay, so for the panel discussion, the topic we're looking at is ESG integration in investment, decision-making, strategies for banks and insurers. So what this means in essence is that we want to discuss strategies that banks and insurance firms can be able to integrate into their systems. ESG strategies, they can be able to integrate into their systems to help in making smart investment decisions. And to confirm again, I want to confirm if Nana is online. I don't know if she can hear us and join in, but if she's not, we can kickstart. We already have the moguls in the house, so we can push through with this. Okay, you're welcome, sir. Mr. John, we want to thank you for being here once again, sir. It's a pleasure and an honor to have you here. And Pastor Itwa, too, we want to really appreciate you for coming on. So without wasting much of our time, while they're trying to rectify that, let's kickstart. So, Mr. Itwa, you're the founding partner of SIO, and we have a question to ask you as an audit firm that carries out a lot of finance audits and also that helps to set the record straight for finance institutions and other institutions as well. We want to ask, how can institutions be able to integrate strategies? How? Seeing their records over time, seeing how their notebooks look like. How do you think, what kind of decisions do you think they can be able to make to ensure that their investments or the decisions around their investments stay smart to keep them sustainable?
Thank you very much, and I must say that I'm glad to be here. I didn't expect to find myself on this panel, but somehow they asked me to join, and I said I'll be quoting from the book of Genesis. Genesis chapter 1, verse 1. In the beginning, God said, "Let there be ESG." Because the whole of creation really is about sustainability and making sure that things can continue, multiply, reproduce, replenish, and keep the earth going. It's just that along the line, a bit of our greed, a bit of our selfishness, a bit of our demand for money and monetary benefits has made us contravene a lot of these objectives. And the reason why auditing started in the first place was to preserve value and give accountability to the people who invested in ventures. Along the line, the focus was essentially on profitability and maybe on building a big business, but sometimes the missing link was on sustainability and ensuring that there was proper governance to an organization. And I'm glad that now the world is waking up, the world is turning around, the world is beginning to realize that it's not all about profitability or money and more money. It's about creating value, not just value in terms of the size of an organization, but value in terms of the growth and development of the staff, value in terms of preservation of environmental things that need to keep going to keep the environment absolutely good and clean. Value in terms of organizational culture, ensuring that the organization has a set of rules that will ensure that the organization is preserved, lives, is protected, so that people don't come one day and they find that the gates of the organization is locked because certain rules of sustainability were broken. And value in terms of generally making the world a better place. So it's time, well, and a lot of audit firms, including ours, are beginning to look very critically at all the essentials of environment, sustainability, and especially governance. We've always paid a bit of attention on governance. Even at the time, it was necessary to do audits of the boards and things like that, and so on and so forth. But there are much more critical issues in terms of governance and preservation of wealth and culture and character that are now very important. If we do not get these things right, a lot of the organizations that we have will not go beyond the first generation. And you find that that happens a lot in Nigeria. After the death of the founder, the entrepreneur, the organization disappears, it just falls apart. It falls apart because they, first of all, wanted to make their children the managers of the organization, and they may not have the interest or the competence. Falls apart because they didn't put in necessary ESG frameworks that will ensure that the organization survives. I think the critical thing now is for us to really have a serious agreement. And I think that's one of the things Ipmc'S is trying to do on what the benchmarks, the standards, the limits, the absolute essential will be to ensure that the right environment is created for everybody to prosper. Thank you.
Thank you very much, sir, for that explanation. It gives a broad horizon of knowledge to the essentiality of ESG, especially when it has to do with corporations. It would bring me to SEC, and this would make me ask you, what role is the SEC playing to ensure transparency and accountability? Because ESG seems like the buzzword right now, and then people could do a lot of things to put themselves out there. I know that sustainability reporting is a thing now, and when you're giving your financial reports, you must talk about your sustainability endeavors. How do you ensure that people keep transparent while doing this? And also, how do you hold organizations accountable for themselves?
Thank you very much. It's all how many there. Commission has been started working on the FRCC. We are on the financial agencies are to develop the finance of the financial principles for financial industry. We stopped there. Adopted that principle, the sustainability financial principle for capital market. Also didn't stop there. The commission went further to develop framework for reporting. After this framework, we are also going ahead to develop a template for reporting, which is key. It's part of the issues we're discussing here. And of course, we have strong guidelines for reporting. All these have been in the market, and of course, the commission continues to monitor. So these guidelines are basically voluntary as it is today, but then we are continuing to monitor and encourage companies to continue to report and comply on these principles and guidelines that have been given by the commission. So those are the roles we are playing for now. And we are very expanding the reform, which is ongoing now.
Thank you so much, sir, for that. It means as a regulator, you are taking on the responsibility of ensuring that there is transparency. You're putting in strategies in place, which includes, working with, what I call it, coalizing with other agencies who have this responsibility as well, to ensure that for the sector, that it's not just about transparency, but it's about responsibility to comply. So before we get to Nana, she's online, I want to ask you just one more question, sir. How do you plan to enforce compliance? Because I've heard things you said, and then mentioned several, things you've been putting in place. So how would you ensure compliance? What are the strategies in place to ensure that banks comply?
Okay, so when everybody was discussed about the adoption readiness working group which the commission is part of to develop the national master plan. So what the commission wants to do is we have to enforce in line with our master plan, which is a roadmap for national roadmap, which is coming up by the ISS sustainability standard that is coming up. And like I said earlier, for now, reporting is voluntary. And since it's voluntary, enforcement when something is voluntary is by encouraging people, advocacy, to show the essence. And of course, with the sustainability financing report, you see that a lot of investors are looking at this company. Like, I believe that investors sitting here today, they look at the top 5 companies that comply. So if anybody who is an ethical investor who wants to invest in line with ESG, we will look at the top 3 banks. And we probably will be looking at insurance sector. So what we have done so far to ensure enforcement is to continuously monitor those reports that are coming. And of course, we don't just look at those reports, we analyze. And where there are gaps, we tend to give advice. And the commission has been doing this. And continue to do this until the reporting becomes mandatory. Then, of course, people will now begin to be penalized for non-compliance and all that. So that's what we're doing as of today. Thank you.
Okay, thank you very much, sir. So you said a key thing there. So, even though reporting is voluntary, there are lots of it is a risk as well, because there are lots of implications if it's not done. For instance, when it's done, it boosts investor confidence, like you said, to help to, invest in the organization, as well as customers. And there are lots of people who also look at the background of institutions to say if it fits into what sustainability is all about today, and before they commit to them. So I believe the finance sector is here, and we are hearing from the regulator, and then we are also taking necessary notes of what to take back home. So we have Nana online. I don't know if I know she's hearing us. I don't know if
can you hear me?
it's with her, because I have some questions to ask Nana. Nana is from the Nigerian Sovereign Wealth Fund, and
I can't hear you. You're muted in case you're speaking.
hello, so can you hear? Okay, so I think you can hear me now. So we will ask you the questions, and then I'll hand over to you to answer. So we want to find out, how has NSI integrated sustainability into its core investment strategies? How has NSI been able to work into best strategies which involves investment? We want to know what's plan, what you've been doing for a while now, and the impacts it has had so far.
Thank you. Good morning, ladies and gentlemen. Good morning, fellow panelists. Apologies I couldn't be there in person. I have another engagement here in Abuja. So to your question, so at the NSIA, just a quick background, we manage Nigeria's Sovereign Wealth Fund. So we are a federation-owned investment institution, and we have a threefold mandate to build a savings base for future generations of Nigerians, to provide stabilization support to the government in times of economic stress, and to improve the quality of domestic infrastructure. And we do this through three core funds: the Stabilization Fund, the Future Generations Fund, and the Nigeria Infrastructure Fund. So as an investment institution, we have a very robust ESG framework, which basically integrates ESG considerations within our core processes, our operations, as well as our investment decision. So particularly in terms of our investment decision, ESG plays a huge role when appraising investments. So whether it's on, fund managers that we're bringing on our Future Generations Fund, or whether it's infrastructure projects that we're investing in, through our Nigeria Infrastructure Fund, we do carry out a very detailed ESG due diligence on these fund managers or these potential projects before we make the final investment decision. We have a very robust sector exclusion list, which is aligned to our ESG commitments. So there are certain sectors that we don't even invest in, that we don't even carry out due diligence in, because it falls within those sectors that we don't invest in. But for the sectors that do not fall within our exclusion list, we carry out a detailed due diligence to identify, the E&S risks, the E&S risk attached to that investment opportunity, using the IFC performance standards. Beyond the E&S, assessment, we do carry out gender assessments as well to ascertain if that potential investment opportunity is aligned with the 2X criteria. We also carry out a climate action assessment to see if that deal is aligned with TCFD recommendations. And then we carry out an impact assessment to see what impact can be generated from this potential investment in alignment with the UN SDGs. And all these form, a position in taking the final, investment decision as to whether to go forward with this investment or not. And beyond the due diligence or the investment appraisal stage, as a project is ongoing, there's constant monitoring and reporting, up until that project is completed, up until it is operationalized, and up until, we exit that investment. So throughout the entire life cycle of these investments. And even beyond our investments, even in our normal processes, our procurement, we deploy sustainable procurement practices. In our HR, we've incorporated particularly the S, right, the social part of ESG within our HR units. Our admin, the running of our offices, doing so in an environmentally friendly manner. So it's really across, our investments and our operations. And in terms of the impact we've seen, obviously we've been able to access new markets, we've been able to access new asset classes. It has enhanced our risk management processes. It has enhanced our portfolio monitoring and oversight. And overall, it has helped us, to improve or to deliver more value to our stakeholders, which is the Nigerian populace.
Really caught my interest. Internally audit yourself to ensure that you are qualified for such. So what it means is taking responsibility, taking ownership, and ensuring that across the framework of the organization, because she also said something on gender inclusion as well. So it has to do with across board, across the framework of the organization, that you work this framework into the core operationality of your organization. I am still with you, Nana. I don't know if she's still hearing me. I want to ask the challenges you've faced so far doing this in Nigeria. What have you faced? What have you faced with organizations that seek investments, with people that seek investments? What have been the challenges so far? And how do you think this can be addressed?
I think a major challenge would be, the lack of local expertise and capacity. When you look at the developed economies, right, ESG is not a new thing. This has been, a major factor, across industries, for a while. But then when you look at the not just the Nigerian context, even Africa, and not just even Africa, I think generally with developing economies, it's still a fairly new concept, right? So there's that capacity gap. So I would say that is the first one. And then strongly tied to that as well is the fact that the regulatory landscape as it pertains to ESG in this part of the world is still very nascent, right? So when you have a lot of instances where, say, for example, regarding sustainable investments, you have a lot of instances where there's a lot of funding in the global north, but this funding is not being able to be mobilized to this part of the world. Again, because the regulatory landscape is nascent, because there's misalignment in standards and taxonomies. So what we might consider as green or what we might consider as sustainable may not fit into the context of green or sustainable, in other climes. So that I would say is also another challenge that we've experienced, particularly when engaging with foreign institutions. In terms of how these challenges can be addressed, or rather what we have done, the role that we have played in addressing some of these challenges. On a national level, we engage closely with regulators in providing support in building that framework or that regulatory landscape at a national level. The essay to the president earlier on spoke on the carbon market intergovernmental committee, which is developing Nigeria's carbon market framework, and we sit on that committee as well. And support in the development of that framework. But beyond the framework, MRV systems, capacity building of project developers, these are all things that we're involved in. So on that national level, and then beyond the national level, we also leverage our global networks, at an international and a global level to ensure that the perspectives, or at least to facilitate or try and contribute to setting of standards and ensure that emerging market perspectives are reflected in global standards. And, this barrier that stops the flow of capital is at least reduced to a reasonable level. So these are some of the ways in which, we have, played a role or are currently playing a role in addressing some of these challenges that we see.
Things that stand out. One, lack of local expertise and capacity. And for us, this means that work has to be done. Serious work has to be done to ensure enough capacity is built, to ensure that expertise is encouraged, because this is what will give you the technical know-how on what to do, especially internally. Like something else you said, there are a lot of funding at the global north and not much in the global south. Why? Because also, when you look at the practices, the benchmarks that is used to zone who gets this or not, when it's applied to the global south, a lot actually fall wanting. So what do we need to do? There is need to up our game. And how do we do that? Everybody is clamoring for foreign direct investment. What are we doing to bring this home? We need to build capacity. We need to take this as a serious business. Like Seth said, yes, it is voluntary, but we are seeing the necessary need why we have to incorporate this into our businesses. And before we go on, there is somebody important who is here. She needs to join us in this discussion. Please, we'll have one more round before we conclude. I want to bring her up. That's Mrs. Olayinka David West. I don't know if she's still here. The associate dean of the Lagos Business School. And we put a round of applause for her after finding out. The reason why we need her is because I have heard from the regulator. I have heard from the investor. I have also heard from an institution. I need to hear from the professor. So that's the reason why we are bringing her here. We need to hear from the academic standpoint, the need, the essentiality of this topic today. So, Madam, you're welcome. Thank you very much. Good to have you here. So, without wasting much of our time, I want to put some questions across to you. You have heard from the regulator, you've also heard from the investor, and we've also heard from the auditor as well. So what do you think about this ESG thing? Everybody's saying ESG. What does it mean for the banking sector? How do you think this can be integrated into the system from the academic standpoint?
Good morning, and thank you very much. I'm not sure if there's an academic standpoint that I would present, but I think it's the business standpoint in general, in the sense where we need to think about ESG as a business strategy. It's not about let's do this for the sake of this, so how do we integrate it into all our things? And that means that we all need to change the way we think and the way we practice. Because when Nana spoke around the issues regarding capacity building, if we ask 10 people within the organizations that you're rating, what does ESG mean in your organization? They won't have a clue. So how do we build awareness and communicate? Because it's not about the reporting, it's about the practice. And when we have these practices embedded within our organizations, the reporting is intuitive. So it's not about struggling to get data. So I'll pick on a couple of things that you mentioned. You know, we talk about gender equality, which is one of the social principles, and it's one of the challenges we have in our ecosystem, right? But when we're looking at it, we need to look beyond the board. Because 50% are the board, but what happens? And does the organization have a systemic manner for getting women off the ladder? You said only one organization didn't have a bigger issue. But how do we think about it when you look at the CV, immediately you're biased because the person is a woman? That's discrimination. So when we're talking about human rights, that's also part and parcel of it. And unfortunately, we all have unconscious biases that we're practicing every day that is impacting our decision making. And that's why I said we now need to sort of unwash ourselves and try and relearn and see even our communication. To what extent are we mindful that we portray gender lens? Even events like this, to what extent are we mindful that we have gender equality and not panels, right? Men panels. And all those things are the little nuances that feed into good business practice. So from a regulatory perspective as well, how do we ensure that the regulators can effectively monitor sustainability? So we're not doing it because we now want to apply for a loan and it's not let's package ourselves and we don't do these things. But let's build it as a system and as a business strategy. So from the academic perspective, as I said, it's an ecosystem issue. It's a systemic issue. But we need to now be aware of it. That's the first thing, awareness and acknowledgement that we're not there. The second is, okay, what do we need to change and how do we need to get there? Because there's a gap to be closed, right? And then the third is, how do we ensure that we're doing it and doing it sustainably? Because it's a practice that we want to ensure that we can maintain and retain in 10 years, 15 years, 100 years. So that's why I said it has to be part of our business strategy that is embedded. Thank you.
Thank you very much, ma'am. Thank you. So she said a lot around gender inclusion, and I very much agree with you. So I'm going to come to the regulator. Yes. And I have a question I want to ask you. When you started, the first thing you talked about was that this reporting, I'm going to talk from the reporting standpoint. You said it's voluntary. And to ensure compliance, that there is needs anyways, maybe to create it to become something that is enforced. That is something that you would walk around saying that is enforced. Now that it's voluntary, we are encouraging things, but as a regulator, seeing how deep this is, there is need for gender inclusion, there is need for, ensuring that, like Nana said, environmental and social due diligence, and there is also need to ensure that the core culture of the organization is sustainable. Do you think it should remain voluntary? You are the regulator. Should it remain voluntary? And if you feel it should not, what do you think the regulator, you as a regulator, what should be done to move from being voluntary to becoming compulsory?
Okay, yeah, listening, before I take that question, I appreciate the issue of gender, and I believe it's something everybody is thinking around, and hopefully we'll be able to get it right. Society-wise, but if you are listening, you notice that I said it's voluntary, there are efforts within a short period of time to make it mandatory. Once it's mandatory, there's no by receiving those reporting will not be penalized. So yeah, it's something that will soon be made for
Mandatory, yeah.
Yes.
So that's talking about the national roadmap. That's it.
Yeah, the roadmap is a national roadmap that will be used to enforce compliance. So what the roadmap will do is just say what to do at every point. Every short time, long test.
Okay, sir. All right, thank you very much for that. We look forward to awareness on this. We look forward to, like you rightly said, advocacy as well on this. People need to know what's currently going on. People need to understand. People need to see the need to own it, to buy into compliance. And we believe that these measures are put out there and that the finance sector will work themselves into this to ensure compliance. So we're coming to Pastor, and I want him to say something around the need to incorporate gender inclusion into the system. How do you think this can be done? And what do you think it will be able to achieve in the organizations coming from the financial standpoint? Having women, have this career standpoint where they move up the ladder without discrimination. What kind of impact do you think it will have in the organization?
I don't know why you choose to ask the first one. Questions about women. I saw looking at women a long time. But nevertheless, I want to answer or speak to two areas. The one that John left off. How do we ensure that there is some kind of compliance or some kind of insistence or mandatoriness of making it mandatory? I think it's going to evolve into that, because this is usually how these things happen. And I want to thank Ipmc for even having this conversation. This is part of enlightenment for a lot of people. I know they have their own business background to this, but that's okay. I told my friend and brother, it's very astute man. But nonetheless, we need to continue to engage. But typically, there's going to be compliance and being mandatory over time. Number one, from international point of view, there's a lot of international pressure right now on everybody. That's how IFRS started. It started like a buzz, and then became a mandatory thing. The same thing with even auditing itself started sort of like this. The second is that along the line, there might be some legislation that will be put in place through the National Assembly or whatever it is that makes it compulsory for people to have a minimum level of ESG engagement or sustainability, ESG reporting and things like that. Right now, it's becoming a lot more important and necessary if you want to be considered as a serious company operating in Nigeria or anywhere else. And then, of course, the third is from the regulator. A lot of the things that insurance companies do right now is because NICOM forces them to do it. A lot of the things that banks do. Just last week, the CBN moved into a bank, and the bank called the NDIC moved into it. So the regulator too has a lot to play in opening up its game very quickly and ensuring that everybody knows where they're going. With regards to gender inclusion, obviously that is inevitable, and we need to apologize. We men for years of not having put women on the right pedestal that they should, and I'm happy that this push and pressure is there. It's inevitable. But it's also from two perspectives. We have to look at it from two perspectives. Number one, the women themselves have to rise up and push a little bit more and not want to be discriminated against. Okay, even in my firm, SI, when I was managing partner a couple of years ago, we wanted to recruit somebody and was a lady, and she was by far extremely competent as far as I was concerned. And I was ready to offer her the job, only for my head of HR, who is also a lady, to come back to tell me that we couldn't offer her the job. And I said, why? He said she discovered that the lady was pregnant. I said, what has pregnancy got to do with competence? Now, what do you expect a young lady to be if she's not going to be pregnant? So anyway, if you employ a pastor and insist, then we must see that for another 2 years she's not going to be pregnant. I say, we are not going to insist on that. She can have 12 babies if she wants. All I know is that she must find a way to make sure she does the job and does the job well. Now, my brother explained politics, and some women want to be involved in politics. Then we say we're going to have a meeting at 1 year. Don't you know I'm a married woman? I said, no, if you want to play politics, married woman or no married woman, go get permission from your husband and come out at 12 midnight for 1 year or 2 years. So this is what I mean by the women themselves need to be up and doing. We're going to make a way for ladies, but ladies have to also show competence. Thankfully, over the years, and they don't want to also say, because I am a woman, I can't do certain things. No, you have to do the things because the work has to keep going. Thankfully, these days, people tend to think that you can somehow trust women a bit more in certain things and so on and so forth. And that's becoming totally inevitable. And of course, there are many extremely competent and capable women. And my mother, I dare say, was one of them. And she proved herself that she could do much, much better than most men. So it's inevitable. What I'm surprised about is that it's taking so long and it's still an argument in this day and age. Like we're still talking about gender inclusion, still talking about discrimination and things like that. Those things should be put in the back burner. They should be forgotten about. And it should be just normal to have anybody be what they want. The only place where I would draw the line is the he and she battles. I'm not going to do that. I don't want that to happen. I know this LGBT question. If you're a woman, you're a woman. If you're a man, you're a man. Period. Thank you very much.
Chiming on what Afeekwa just said, especially regarding any corporate work they solve with begin to invite into. And that's true, but that applies to the large corporates. How do we take this down now? Because we still have a large proportion of our companies, I think more than 99%, that are micro, small, and medium. So it's not about the big ones doing it and doing it well, but how do we ensure that consistently as a nation that we can actually propel the ESG mandate and mantra and let's go down market as well.
Okay, so is this question for Pastor or do you want to? Okay.
Because a lot of the companies we're looking at are not under the compliance radars, for example.
Exactly.
So how do we invite the spirit of self-regulation and understanding and awareness to ensure that ESG is properly mainstream?
Okay, let me before we ask the next question, let me chip into that and say something around that. There are lots of SMEs, sincerely, there are lots of them, but I believe that the core essence of sustainability, we can even start from educating young people, from business leaders. A lot of entrepreneurs start businesses without understanding the essence of ESG. So what can be done? I believe like the Lagos Business School, you're doing a lot to ensure that this is embedded in the core, the mind of the people, such that when they start institutions, they already understand how to run the thing. So I think also from the regulatory point of view, there is need to bring this thing down, like you said, and be able to start even from universities. If you go to schools, there is just recent years that is being worked into institutions. Where I know that the University of Lagos, just like Lagos Business School, they have a faculty now for sustainability. So these are ways to be able to raise people who understand this as its core, as in its core, who has the background of ESG and what it means as a culture. And when they begin businesses, the mindset is already there, like you said, and they can be able to comply easily. Thank you very much, ma'am, for that. Really appreciate it. So, Pastor, before we close, this is the last question I'll be asking you. What do you think about ESG and religious institutions?
Well, since this is the last question, I'll take an offering device. Well, the church is challenged, especially the Catholic Church, with all due apologies to the Catholics that are here. The Methodists have done extremely well in trying to encourage and incorporate women into the leadership fold of the organizations. The Pentecostals have done fantastically well. Women are just taking charge in some institutions, and you have a lot of female pastors and bishops and so on and so forth doing what they need to do, and the men are happy to follow them and do what they need to do. So we need to break the mindsets. We need to break the mindsets. We need to break the thinking. We need to break the culture. We need to break the attitude. Women are extremely competent. They're extremely capable. They can do whatever a man can do, even much better. So in fact, the leadership role in the Garden of Eden was actually given to the woman, because she was a much better version of the man. And that's why we got into trouble. I'm not denying. That's a sermon for another day. But to be honest, it's just a shame that this discrimination has held on for so long. Probably came from Genesis chapter 3 also, that God seemed to have ceded that leadership position to the man. But it's time to break this, and a lot of religious organizations are working hard to make sure that this is broken and we can really have a level playing field. It's a shame that a woman should fight to show her competence. It's a shame that she should fight to show her capacity. It's a shame that she should fight to also break the barriers of discrimination. I think it's one fight too many. You know, my mother, like I said, was the first female permanent secretary in Nigeria. It looked like a big deal then. But when I look back now, I don't even see why that should have been an announcement. She was a woman who got into the civil service. She should have become permanent secretary. What's the big deal about her being a woman? It's like saying this thing was manufactured by a black man, and then, oh, the black man made this, the black man made that. It's not the black man accepting discrimination and that he's perhaps shouldn't have made it or made that. Every person was created equal by the Almighty. So I'm going to be one of those people in my religious sector to keep advocating for inclusion, inclusivity, and a level playing field. I think it's very important. Thank you.
Thank you very much. So, last question for you, Mark. As an institution committed to building, transforming business leaders, we want to hear from you what you think the way forward should be, coming from the aspect of transforming leaders.
Thank you very much. And I think this is one of the Lagos business to create responsible leaders and managers. But then again, one thing I'm always mindful of is scale. We can only reach, let's say, a maximum of about 10,000 a year. Is that enough to break the camel's back? Probably not. So how do we take this? So the challenge is scale, and I don't think that it is a single institutional responsibility, but how do we ensure that across all our institutions, we have this as a priority? So that means going back to our educational curriculum, going back to the National Universities Commission and ensuring that, we're creating this value set from ground up, so we don't have to teach it later on. So in practice, becomes that, see, this is normal, and we normalize it. So we've been doing sustainability, helping organizations even think through their practices and institutionalizing sustainability, but then that's almost on a self-reporting basis. And that's why when you look at it, it's really a self-reporting optional factor. So what we now need to do is, how do we make a business case for sustainability? Because that means a CEO, a board, has to understand, why does it make sense? Yes, we know the mantra, doing good and doing well, but in my own little box, why does it make sense, and how do I need to do it to ensure that it makes sense to me and aligns to my business? I don't think there's a cookie cutter approach. I think it's really about looking within and defining and understanding what will sustainability look like within our own business, within our own sector, and how do we ensure that we're contributing back to the to the nation. So you said something about social, right, or climate. One of the things we need to be looking at is, okay, distance from workplace. Because when you think about it, are we calculating the contribution of carbon emissions, for example, when people are coming from all sorts of places, or if you look at social and wellness, are we mindful of the number of hours our employees are spending in their commute? And how do we work through those things? So it's not about, the externals. Let's do it at home first and ensure that we have good practices within, and then we can begin to promote and propagate those. So it's all about education, it's defining it, making it a strategy, and then building a business case for it. Thank you.
Thank you very much, sir. Thank you so much. Please come to the couch. Last question, please, sir. As to radiate and what do you think is the way forward? Can you kindly encourage us on what you think we should keep doing until we get to a measurable standpoint?
Okay, so for us as regulator, the key is to have a framework and ensure compliance with this framework. So now, ESG for a country like Nigeria is key. Because about our environmental issues, we all know what it is. During the presentation, we saw issues around risk management, which is a big challenge. For the financial institutions, the investment in ESG is something that have been targeted towards setting aspects of ESG that can have immediate impact on our economy. So it's not just ESG funding, say, but just it's okay to fund in this sector, this part of ESG. This is the impact we are going to be seeing within the shortest period of time. So once we're able to do that, of course, it will help. Now, for the fact that apart from those regulated entities, we have entities like the SMEs who are not regulated. How do they now get to be part of ESG, which is one of the key factors we have to consider. Now, for us as regulator, based on experience, like she said, education, capacity building is very key. And I know the Commission is collaborating with sister regulators through the FSROCC to carry out a lot of enlightenment. And of course, there's nothing wrong to continue to engage stakeholders. There's nothing wrong continuing to preach. There's nothing wrong also having in the curriculum right from primary school to see why it's important for us to have a safe environment, why there is need for equality, why there's no need for discrimination, why, of course, we're talking about climate change. So how many kids in this school understand what climate change is? So for us to, this is beyond just the regulators, this is us sitting down here, taking frantic effort, making frantic efforts to say, yes, that we have to do them for the church. Church it's not just by identifying many, it's environmental issues are key. So how do we preach to our people in Sunday schools, in when we talk about, because in Nigeria, we are very spiritual people, tend to listen more to pastors. So how do we get to tell our people to say, there's climate change, there's need for you to safeguard your environment, there's need for you to know how to manage your waste. It's only in Nigeria where you put all the waste in one particular waste bin. So we talk about recycling. So how do we teach our people that, look, you need to put this waste there, for the companies themselves. So there's a whole lot of work. So that is at regulatory point of view, we can only set the framework. If you don't have anybody to regulate, you will not be regulating anything. Nobody will be complying. And we have seen situations where some people are ready to pay penalty and violate and earn more money, right? So the board itself needs to realize that, no, we don't need to clear gas, for instance, because there's an impact. Let's look for a way to trap this gas and look for a way that can be useful to us. So as individuals, we need to invite the culture that, look, ESG is good for us. Not just because we need to be regulated and we need that finance from Bank A and Bank B. And we just come and report what we are not even practicing in our company. So at this point, I think advocacy is key. We need to invite what ESG means from home. So that's what I would say. Thank you.
Thank you very much, sir. We have come to the end of this session, and
I agree with him 100%. He seems to be angry with his pastor. Just tell the pastor ESG more tight and office. He will do what you want.
thank you very much, Pastor, for this. We have come to the end of this session, and one of the key highlights is that this is not just an obligation, it's a responsibility, and it has to be earned. So when we're living here today, let's live with that mindset. We're not just doing it because we're obligated to, or because this is something we need to oblige to, but it's something that is affecting us. It has direct implications on us as human beings, a risk as a business. So we need to take full responsibility, even from home. Okay, so I want to open up the floor just for one or two questions before we round up. I don't know if anybody has a question to ask or something to say. Okay, sir, you have this space there.
Yeah, thank you very much for the opportunity. Yeah, I like to respond to the comment made when you asked that should ESG be made mandatory? And my views were that making something that is voluntary, mandatory, tends to now bring about a level of compulsion in an industry and results to what is called greenwashing. I hope you know what greenwashing is, where you will now be finding, because when it comes to, there's a bit of integrity in reporting, because you find out that even most of the data you collected, a lot of them, verifiable data is also difficult to verify, because I can say that there's a certain degree of, most of the data you collected, third-party verification is completely tough. You probably spend years in getting third-party confirmations of many of what a company writes that they may have done by way of ESG reporting. So I'd like to say that the voluntary reporting is the better way to go. Where people will not be under compulsion. It's now when you now find out that you may not be relevant in the scheme of things, particularly in your own sector, where people prefer to do business with people who are more environmentally friendly in their ways. So reports of this nature goes a long way in providing information to many who are like investors, who would like to invest but probably use financial institutions or look for insurance companies where they would like to say those who are actually complying with ESG rules on a voluntary manner without being compelled to do so. When you are compelled to do so, you'll be shocked. That report we are going to be sending today, everybody will be almost 100%, because everybody would want to get to where they are meant to be. So leaving it at a voluntary compliance level is, in my opinion, the better way to leave it. Thank you very much.
Thank you so much. Just a comment before I ask the regulator to comment on this. I want to say something. Greenwashing is actually an uprising challenge, which, like you said, even when you want to carry out assurance reports on, institutions, you find out that getting verifiable data could be an issue. And also greenwashing and also several social issues. So, as the regulator, I am seeing this from the standpoint that there is need to have a stakeholder engagement when all parties come to the table to discuss this fully. I know you're doing this, but I just want you to say a little about it, because I can see obviously there is need to have a stakeholder roundtable where parties are involved and this is discussed. If it's going to stay voluntary or if there's need, because there should be a need for buying for compliance.
Okay, so issue of ESG have commenced before now. For a while it's been voluntary. If you see, even when IFRS came on board, it was voluntary until it became mandatory. So the idea of making it mandatory is just to ensure that everybody will have to do it. Today we are discussing looking at a rating that might come up to become a benchmark. And there are obviously reviewers, just like we have auditors today, that will have to audit financials, just to be sure that you don't just do numbers for the regulators and for investors to see. So there are obvious reviewers that will look at this and certify that this information you're bringing is okay. So pretty much like say, is something everybody is aware of. So some of these environmental issues are very obvious issues. So if somebody monitors the organization, you don't just throw it forth. If you say something, it's easier to ascertain if your business is affecting an environment. It's very easy for people to ascertain that, look, you have done this business by way of your production, there are certain effects on the environment, for instance. And it's also easy to ascertain that, yes, these are the mitigants that you put in place for this impact to be reduced. So I don't know how, it might be a bit too difficult. Maybe at the beginning you might see one or two greenwashing, but I don't think it will go too far, especially with the reviewers on board, which is one of the requirements. So I don't know if that makes sense to use that.
It's an opinion.
I know it's an opinion, but it's important that you begin to look at that opinion that, everybody has that opinion. That's why there's always a mitigating factor. It's a risk, right? So it has to be mitigated. I know the reviewers will play a good role. The regulator cannot see everything. It's not possible. We are not witchcraft. Yeah, thanks.
I'd like to chime in on another point that I don't want us to sweep under the rug, and that is the access to data and how our organizations gathering and collating the relevant data to enable and monitor environmental, social, and governance practices. And if we're not careful, we'll be doing the right things, but again, is it our practice? What does environmental mean to X, Y, Z? And so you brought out a set of indicators, but even within that organization, do they even have comparable indicators? Where does the data come from? How do they ensure that it's valid and verified? And what systems do they need to put in to ensure that they can continually generate this data. So that's why I think that we need to look at ESG more broadly and ensure that it is ingrained in our practice and we're doing it intuitively, so we're not greenwashing, whitewashing, data fabrication, etc., etc. Thank you.
Thank you, ma'am. So it still falls back to capacity building and expertise. Any other question? We just have one more question before we round off. Okay. That will be the last question. Yes. Thank you.
I just want to make some comments and really about around the 2 points that have been made, which is essentially data collection and making things compulsory. But I've found in my experience that, making things compulsory, you have to be very careful on this again. See what kind of attitudes that you have, and then you bring other layers of monitoring on that, and then we begin to lose focus on what we really want to achieve. I know that the insurance industry, one of the oldest compulsory insurances that we have is motor insurance. And it's about the only insurance where you have clear certificates. Nobody fixes fire insurance policies, nobody fixes any other insurance, only that, because that's what it is. Because it's different, there's an attitude to it. So I think, yes, it's true that what you have in making things compulsory is that it increases speed sometimes or adoption. And if you ever do it, then maybe it should be something that is temporary, not really compulsory for a certain period, and then just get things going in the particular way. But also there's an aspect, data collection is absolutely critical. It's critical for everything you want to do. How do you want to incentivize people, you want to standardize, you want people to see the results or adoption. Data is extremely important. And if you want to calibrate the rewards that people that your companies will have if they go into certain insurance. And for insurance, what they want to use data to bring out is the correlation between the companies that adopt and the outcomes of their business in terms of risk management when it comes to insurance. What are their losses? If you see companies that adopt, all these measures, how are their losses? What are the results of that? And if you can do that, immediately insurance companies begin to think about, I want those type of risks. Those are the kind of companies I want to insure. And I'll even give them discounts because it's an outcome that's beneficial even to the insurance. So when it comes to things like compulsory, making things compulsory, I think we should start looking at making data collection compulsory. It's not. It's a different attitude because get the data. If people see the data, then they say, "Oh, this can do with that." So encourage people to then adopt. Yes.
Thank you very much. That's a very thoughtful opinion. We appreciate that. So officially we've come to the end of this very enlightening session. We want to once again thank you all. Can we put our hands together for them? So I want to thank you. We also want to thank you for Lainka, West, for joining us, and of course our regulator. We want to thank you, sir, Mr. Briggs, for being a part of this session. So before you leave, we just have a photo session, just a few seconds, and then we'll be off. Yeah. So we'll invite our CEO to join in. And so also we want to thank Nana for joining us online as well. We really appreciate your presence and we appreciate your thoughts on this very informative session. Thank you. Thank you. Sorry, you still are dismissed. Yeah. Let's- Thank you very much. So the next section is the award section. We want to give out awards. To handle this session, I'll be bringing back our ESG consultant, Advocate Femike, for this session. So please bear with us. After this section, we'll be giving the closing remarks to round up. So we crave your indulgence to exercise some patience with us, and we'll almost be done. Thank you.
Hello, everyone, once again. Thank you for your patience so far and staying with us from the beginning to this point. We are almost done. After the award sessions, we are going to be having the closing remarks and the tea break. So because we kept this really quiet, the top five, it has come to my notice that the top 5 banks and insurance companies are not around to receive their plaques. So we'll be sending it to them, and we're going to be announcing that in absentia. I already mentioned earlier when I was giving my presentation that Zenith Bank has done exceptionally well and has exemplified leadership in sustainability reporting and impact through a clearly defined sustainability strategy and management approach. So we classified these awards into 3 categories. We have the gold class, the silver class, and the bronze class. The gold class is what you will call first if you were in a classroom setting, the silver class second, and the bronze class third. Zenith Bank has come first in the ratings for 2024. Access Bank has shown exemplary leadership in robust governance reporting systems with extensive disclosure of its governance structure. It has defined strategy for transitioning to renewable energy across all its business locations. The bank has also conducted periodic maturity assessment to gauge their relevance to both internal and external stakeholders. That is really exemplary and has shown initiative towards ESG with their ESG footprint. Stanbic IBTC Bank has come third in the ratings assessment for 2024. The bank has acknowledged its diversified board system and structure and boasts a commendable track record in corporate governance. It has measured and reported on maturity issues like sustainable finance, financial inclusion, and education is prioritized within the bank's operation. Fidelity Bank has shown responsible leadership, financial inclusion, and women's empowerment as key material concerns for the bank and has come forth in the 2024 assessment. Finally, for the 5th position for the bank, Sterling Bank Holdings has shown leadership as well in their ESG measurement and reporting, especially in metrics across women empowerment, carbon footprint reduction, and effective risk management. Please, can we give a round of applause to the bank? Thank you. Moving on to the insurance industry now, we have AXA Mansard Insurance as the 1st position, known as Gold Class in this award. The company has led the insurance category in this rating and has shown leadership in ESG reporting. They have a robust governance practice, materiality disclosure has also been represented, and human capital development initiatives. Action Master has also shown leadership in talent attraction and retention strategy. The company also has a diversified board and sound corporate governance reporting, and has demonstrated leadership in climate strategy through its various initiatives. Coming second in the silver class for insurance industry is Alliance Nigeria Insurance Limited. Alliance has demonstrated robust governance practices with its key driver of the company, with it being the key driver of the company's overall rating. Effective governance structures that ensure transparency, accountability, and ethical conduct within the organization. They have also shown leadership in reporting data on business ethics and information security. Coming third in the insurance sector is Custodian and Allied Insurance Limited. This company has shown robust corporate governance practices and has revealed data on aspects such as corporate governance, risk management, business ethics, and information security and cyber security. This high governance score indicates transparency, accountability, and effective management structures within the organization. Coming closely behind Alliance, Custodian and Allied Insurance is Regency Alliance Insurance. They have come fourth position in the rating for the insurance sector, and they have demonstrated corporate governance, risk management, and business ethics, suggesting a well-structured framework for decision-making and accountability within the organization. So it has come to my notice that there's someone from Custodian and Allied Insurance represented in the room today, and we would like to use that initiative to pass the award to them for their leadership and initiative in ESG rating. Someone coming together? Yes, ma'am. Thank you very much. Custodian and Allied Insurance has demonstrated corporate governance leadership in metrics across risk management, business ethics, and cyber security. I'd like to call on Madam Mimi Ade Odiachi, a non-executive director at Custodian and Allied Insurance, to receive their award for leadership in environmental, social, and governance practices. I also like to call on Mr. Robert Ade Odiachi to present this award. Yes, sir? Okay. And Pastor Itua Igodalo. Thank you very much, ma'am. Thank you for your leadership. Okay, so finally, coming fifth in the insurance sector is Coronation Life Assurance. Coronation Life Assurance has demonstrated a robust framework in areas such as corporate governance, risk management, and business ethics. This indicates that the company has effective oversight mechanisms, transparent decision-making processes, and a commitment to ethical conduct. Please let's give a round of applause for these 10 companies across the banking and insurance sectors. Thank you very much.
So, ladies and gentlemen, we've come to the end of this event. And first of all, I want to thank you all for your patience, for being here since we started till this moment. I want to ask us, do you think it's been insightful for you? Do you think it's something that you've enjoyed? The panel session, the insights into the reporting itself, and all, do you think it's something that has been worthwhile for you? Because I think actually it has been worthwhile for us here. So we want to talk about the highlights of what we've discussed so far. And I think the major one is for us to understand that ESG as a whole, for a corporation, for an entity, what it means is that it's not just an obligation. It's not something that you do because you want to acquire an investment or because you want to look good to investors. It's something you do because you are taking responsible for your actions through your operations to ensure your sustainability. So this is not about the regulator telling you to move from here to here. This is you knowing that you really need to take this journey, take it seriously, because this is what will help you to stay sustainable, help you to stay profitable, and also help you to make measurable impact. So for me, that's the highlight of this. And also when we go back home, we need to begin to build capacity. Nana said a lot around capacity that has to be built in the global south. We need to bring it out to Nigeria. We need to build capacity in our organizations. How do we do it? Look out for competence, regardless of gender. We need to be able to employ the right people. We need to be able to train our employees. We need to be able to ensure that the board understands the essence of ESG and that is worked into the system. And we also need to carry out this audits from time to time, assessments, asking yourself, this journey, am I up to it? Am I complying? Am I doing the right thing? There are benchmarks that have been specified. These benchmarks have been talked about. We have GRI there. We have a lot of institutions that are doing things around creating benchmarks that we can use to assess ourselves. I want to chip in this. This benchmark does not look at you. It has nothing to say whether this is a Nigerian benchmark or it's a foreigner's benchmark. The benchmark is the benchmark. So you can utilize it to be able to increase your profitability and operation. So it is one of the key highlights. So if from ongoing, like I said, we need to start to build responsibility. And before I end, I also want to take our time to appreciate the panelists, appreciate every one of us here. I want to thank the bank MDs that showed up. I want to thank everyone here, the stakeholders, to ensure that this meeting was a success, and it's actually a success. So to the panelists, we are saying thank you. We love you. To all that joined online, we also say thank you. Ipmc's appreciates you, and we believe that this journey, that even as a consulting service firm, that we are out here to help you to achieve your sustainability journey in terms of ESG. We are here to help you. If you don't understand, we can help you build capacity. If you need the assessments, we can help you achieve that. If you want training, we can help you. We are here to support you also as a stakeholder to see that you achieve your ESG journey. Thank you very much, ladies and gentlemen. Before we go, I want us to have a picture. I don't know if you can have a picture of the Ipmc's CEO, the stakeholders in the building, and the staff of Ipmc's. Should we do it outside? Okay. Okay. By the banner. Okay, we can do that by the banner. Then there is lunch, just a mini lunch available for us. We can take our time to network, and then we can assess it. It's just by the corner there. And thank you very much, ladies and gentlemen. While the photography is ongoing, we can assess the food by the corner. Thank you so much.
Where's my segment?
That's how you